Well, folks, I hope you are ready for an absolute massive switch in the market here. Some stocks are set up for an absolute insane upside move, while others are about to flounder like a fish, and we're going to go through that in this video here today. Look at Tesla stock. This stock falling again big here today. 40% the stock has now fallen since December 18th. A pretty dramatic fall even by Tesla standards. Headlines all over CNBC talking about Nvidia this, Nvidia that. Nvidia sales growth 78% in AI demand. Company gives strong guidance. And what does the stock have to show for it? A whole lot of nothing, right? It was funny. I was looking at the options market. People were thinking the stock was going to move massive. And I was just looking at it and I'm like, I don't see it. I don't see the massive move. And so that's why you didn't see me talking on this channel, the other channel about, oh, Nvidia is going to be this massive game changer. Like, no. The days of that are long gone now at this point in time. Trump urges Apple to end diversity programs. The largest stock in the stock market is being pressured by President Trump, right? And you might think, what's the big deal about this? This shouldn't matter for the stock. Look at this. The headline hit. You'll be flipping my flapjacks. And the stock fell off an absolute cliff as soon as that headline hit that Trump's going after Apple to end DEI. My gosh, right? Which definitely shows you we're in a stock market right now where you shoot first and you ask questions later. That's where investors are at right now. And even off of a headline around DEI, people just were like, sell it all, right? That's insane. We are definitely in that sort of market now at this point in time. Meanwhile, you have stocks like Meta starting to bounce back. We're up over $25,000 here today on Meta stock. Amazon had a very nice bounce back. Meanwhile, you have stocks like Costco. Look at my Costco put options. Those are now up 37%. In such a short amount of time, those ones just continue to print money, right? And so what an interesting environment. And then you have the 10-year treasury, right, which is falling off a cliff. Like, this is a ridiculously dramatic move for the 10-year treasury. I'm explaining to you what's going on there, why it matters, why this is huge for the stock market and the implications it has, and why that's all playing out, okay? Woo! We got an action-packed video here today, folks. I appreciate you joining me. Only one thing and one thing only I need from you. I hope you can do this for me for all the time I put into this video here today. And that's hit that like button down there, okay? That's all I need from you guys. I hope you can do that for me. Additionally, if you want to be subscribed to the channel, we are 830,000 plus subscribers strong. I appreciate each and every one of you. If you're looking to take your investing game up to a much higher level than where you're at, you want access to all of my best courses, access to my private Discord chat, the moves I make, my $3 million plus Fidelity account, 1000xstocks.com, all that good stuff. Pin comment down there. Click on that, fill it form. We'll see if we can get you access to that later on this week or maybe this weekend to my private group if you're a good fit to join us in there, okay? All right, very important I start right here because I know a lot of people are going to want me to talk about this, okay? Before we get going into all the flipping in the market and where all these stocks are going to move, I got to talk about Honest. Honest is a stock I own over 30,000 shares of. I don't own in the public count, but I own significant shares in other portfolios, right? And so Honest came out with earnings after the bell. Look pretty darn good, okay? The turnaround's still going very well. Revenue went to almost $100 million in this latest quarter from $90 million in the same quarter last year. Gross profit went to a little under $39 million versus just over $30 million the same quarter last year, right? Their kind of only trouble spot was around kind of SG&A and marketing, but SG&A was kind of the real one. But if you look here, they basically say it was primarily driven by legal expenses, which legal expenses hit Honest heavy in 2024. It should not be like that in future years. And so legal should definitely alleviate, which means Honest's profitability should likely increase, in my opinion, quite dramatically in 2025, in 2025 and in future years as well, okay? So this is phenomenal. Additionally, when it comes to Honest, they have now over $75 million in cash and cash equivalents. Keep in mind, this is a market cap that's $500-something million in this company. They have more in cash and cash equivalents than the entire total liabilities of the company. Do you know how insane this is? This is beyond insane. For a company to have more in cash and cash equivalents than they do in total liabilities, you are special if you can pull that off. And that is what the Honest company has done now at this point in time. And I was running numbers. I'm like, they need to start earning a lot of interest on this money, because if you can get around a 4% rate, which is not unreasonable for Honest to get that on 75 mil, that's an easy 3 mil a year this company could be bringing in essentially, right? So Honest stock's looking really good. I think if there's any dip in the stock, it'll be bought right up. And honestly, the way I see this company playing out, looking at that income statement, looking at where the margins are heading, looking at the guidance, which they guided for a midpoint at around 5% revenue growth this coming year in 2025. I wouldn't be surprised if they're sandbagging that, because Carla has a history now of coming in and beating numbers, right, and doing better than people expect. I wouldn't be surprised at all if the stock's a $10 plus stock at this time next year. Just to be quite frank, I think all dips will get bought. If there's any dips in the morning, don't be surprised if they get bought right up. And Honest goes up and up and up, because you just got too good of a story now at this point in time in regards to Honest. You got nice revenue growth. You have profitability coming along. You got adjusted EBITDA skyrocketing, right? The legal expense should chill. And you got a balance sheet that's a 101. I mean, whew. I think we're looking really good. We're looking really good on Honest. Don't be surprised if that's a $10 plus stock at this time next year. Okay. Salesforce, A-. I graded their quarter here. Very strong quarter out of Salesforce across the board. When it came to revenues, when it came to profitability, when it came to margins, everything looks really good at Salesforce. At Snowflake, listen. Snowflake has great revenue growth, but the company is addicted to spending money. Their expenses are completely out of control. Even with skyrocketing revenues, their expense profile is awful on every single line. Sales and marketing, research and development, general administrative, it's all a disaster. Their net loss was $325 million in latest quarter. So great revenues. Like, you can't ever say anything bad about Snowflake's revenues. It's just their expenses are completely out of control, okay? Now, let's talk about the main subjects of today's video. Where this market's headed, what stocks are set up to do very well, which ones are not set up to do very well. Okay, so Nvidia. I posted this inside the private stock group Discord chat under the income statements tab. Here's the deal. Income statement looks great. That should come as no surprise. Everybody in the stock market knew Nvidia's income statement was going to be great. Like, there was no question. The issue is, this is a grade A income statement, not an A+. What have I told you guys is the issue with Nvidia? I told you the issue with Nvidia is it's like, this perfect student you have that gets, 100% on every test. As soon as they get less than that, you start to say, what's going on? Like, why, is there something going on? Like, why are you falling off? Like, you used to get 100% on every test, and now you're not getting a 95%, you're getting a 94. Like, that's good, but what happened? You were perfect before, and now you're not perfect. That's what we're starting to see in regards to Nvidia. Cracks are starting to show up here where it's not perfect. Revenue growth, great year over year, 78%, banger. But the cost of revenue was up around 98 or 99% year over year. That's a big problem there, because that's going to start to affect your margins, right? So it's like banger, but that's not good that your cost of revenue is rising at a much faster clip as a percent than your revenues are, right? So other than that, Nvidia looks really good, and that's why it's a grade A. It's just not an A+. Like, if the revenue was going up faster than the cost of revenue, it would be an A+ quarter for the company, right? Now, obviously, I sold out of my position back in the summertime in regards to Nvidia, right? And I caught a lot of flack about that at that time, right? Because a lot of people are saying, hey, Nvidia's still got great growth. They're still going to have great growth the next year or two. And what did I tell you guys? I said the writing's on the wall in regards to Nvidia here. Everybody knows already this whole story. Everybody knows great growth in 2025 and growth was going to continue in 2024. Everybody knows that. Everybody knew that. There's no question about that. Everybody knows Nvidia's products are great. Everybody knows about the CUDA software. Everybody knows about it. There's no secret here in regards to Nvidia. Like, oh, I never knew this about it. No. Everybody knows everything in regards to Nvidia. Every Wall Streeter knows it. It's the most studied stock probably in the market because it's been so talked about the last 2 years. So the writing on the wall was here in regards to Nvidia, where essentially the company was in a situation where they were priced to perfection. And if you start to come in with a little less than perfection, people are very spoiled. And they start to say, you know what, I don't really want to be in the stock anymore, right? And you start to be in a situation where everybody's looking out to 2026 and 2027 saying, I don't know about that revenue demand. And that was something I was talking about last summer when I was selling out of my position across all my portfolios. Obviously, I sold in the public account there, and I sold my other portfolios as well, 100% out of Nvidia. And the reason I did it is because I looked at it and I said, I can see how in 2026 our revenue growth is going to be very slow. Very slow. Revenue growth was great last year in 2024. I knew that. Everybody else knew that. Revenue growth very strong this year, but we're already going to start running into a major deceleration of growth as early as the back half of this year. And it's going to get a lot worse in 2026. We're talking major decelerations. I'm not talking Nvidia is going to go negative on revenue. That's a potential for 2027, by the way, but that's a debate. That's a whole debate. But 2026 is a year where you're going to see major deceleration. And so the problem with Nvidia stock here is, do people want to step in knowing you've got massive deceleration coming in Nvidia as early as, third quarter or fourth quarter of this year? And that's the issue. People don't want to step in when you got a stock that has decelerating, we're going to have decelerating growth rates on revenue, decelerating growth rates on earnings per share, and decelerating, obviously, margins have already started to play out, right? Now, what does that mean for other stocks in the stock market, right? So you got to think about the Mag 7 here, okay? Basically, there's a lot of issues with these Mag 7s now, but not all of them. Tesla has issues, they're Elon issues, right? And it's affecting the sales numbers. We know that. I've gone over that a million times, and I already told you guys that was all going to play out before it played out, and it played out, right? So Tesla has a lot of issues. We know that, right? Nvidia has this issue of they just can't win. Nvidia comes in, they beat numbers, but you know what people said? The beats weren't big enough. That was the issue. Nvidia came in with a beat on revenue and a beat as far as guide, but the beats weren't that impressive. That's a situation with Nvidia. They cannot win. They can't win right now, man. And so Nvidia's in that situation. Everybody knows about likely there's going to be a massive deceleration of growth in 2026. And do we want to step in when you got that happening? And a lot of people don't. So Nvidia's got issues. And then Apple has this whole DEI situation. They're going to be in the limelight for that. And, they're going to have all types of pressure. And now if Apple doesn't change DEI policies, Trump's going to stay after them. The supporters of Trump are going to stay after Apple. And who knows, boycott or whatever, right? And then if Apple does end DEI, that's going to be... I can tell you a lot of their workforce is not going to be happy with that because they have plenty of people inside that company that are all for DEI and that sort of stuff. So, they're in a tough spot here, and especially with a higher valuation like Apple has, right? But there's other stocks that are now going to be setting up very, very well. Meta, Google, Amazon, Microsoft. You've seen major pullbacks in all four of those stocks recently, right? But people are not going to look to funnel a ton of money into Tesla and Nvidia and Apple, given the situations they have there. So where money is going to funnel to when it comes to big tech is going to be into Meta stock. It's going to be into Google McDougal. It's going to be into Amazing's On, and it's going to be into Mr. Softy. And so that's where you're going to see, when you talk about any strength you're going to see in outperformance, you're going to find it in those stocks, not in the Teslas, the Nvidias, and the Apples out there, right? Which is... certainly good if you're invested into these sorts of companies, right? Which certainly I'm invested in two of those, right? Heavily, Amazon and Meta there, right? Now, I did this video, back a couple days ago, right? And I said, in that video, if you watch that video, I told you, you can't get the crash everybody wants to get, this massive market crash, right? I said, you can't get it right now because earnings and guidances of the big tech companies that drive the market are too strong. Right? I shouldn't say too strong. They're too solid, right? And that's the point I was bringing up there. Now, you also can't get the stock market to blast off, and just go completely risk on and just to the moon right now because earnings and guides are also not strong enough. So they're solid, right? They're too solid to get the market down, but they're not strong enough to have us blast off this market. And so that's why you can't get this epic crash that a lot of people want. They want the S&P 500 to go down, 15, 20, 30%, whatever. You can't get it right now. You need earnings for the big dogs to all be bad. Listen, man, there's too many A-grade income statements from the big. Look at Salesforce. Salesforce, big dog. Look what their income statement. What was it, an A-, a grade at that? Nvidia's a grade A. Meta looks phenomenal. Google looks phenomenal. Amazon looks phenomenal, right? Even Apple looks too good. So there's just too solid of numbers from the companies right now to get a major stock market crash, right? And that's the thing you got to understand here. Now, this leads into AMD, because I can tell you this report Nvidia just put out makes me feel better than ever about AMD. And here's why. You would be worried about AMD if one of two scenarios happen here, essentially. Scenario one is if Nvidia had a disastrous earnings report and they were like, hey, man, no one wants AI-related chips anymore. Demand's completely drying up for the data center business, and it's ugly out there. That'd be a disaster, right? Because then we'd be looking at AMD and be like, shoot, man, what are AMD's growth rates going to be in regards to data center, in regards to GPUs, in regards to AI chips over this next, couple years. So that would have been bad. That wasn't what happened. Nvidia said demand's strong, super strong, blah, blah, blah. Guidance is good, great. But the perfect scenario for AMD is it wasn't too strong. It wasn't like Nvidia came out there and just put out some crazy guidance and everybody's like, oh my gosh, like they can't get enough of these Nvidia chips. It was just a good, solid guidance. And like I said, it was maybe even a little soft than what some people were expecting out of Nvidia. That's great. That's great news for AMD. It means the demand's still there, but it's not so insane for Nvidia that everybody's just flocking to Nvidia and that's it. And so it was literally the perfect setup in regards to AMD, and I feel more confident about AMD than ever, right? Now, I did this video 3 weeks ago called Keep Buying AMD and Don't Stop, right? And I don't think people realize how well AMD is set up for this next 5+ years. I don't think they realize the work Lisa Su's done, the acquisitions she's done, and integrating those in the company, all the way from Xilinx to the ZT Systems to all the different moves she's made over this last couple of years. I don't think they realize how well this is positioning AMD for the next 5+ years. And whether these big tech companies are looking to cut cost on the chips, they're going to go to AMD. If demand continues to be strong for AI chips, they're going to go to AMD. Like AMD is very well positioned. And keep in mind, AMD is the baby in this segment, so they're the ones with the major growth rates in this segment. And you're going to see AMD's data center growth rates significantly stronger over the next couple years than Nvidia. And so what's going to happen is Wall Street's going to start to look, and they're going to look at Nvidia that's going to start posting like hardly any growth in regards to their AI related business. As early as the back half of this year, they're going to be looking at very minuscule growth rates. And then they're going to look at AMD posting these ridiculous growth rates. They're going to be posting 50%, 100%, 150% type numbers, right? And they're going to be looking and they're going to say, oh, that's where the growth is at. And then Wall Street's going to pile in. They're going to finally start to understand AMD. They're going to go down the rabbit hole and understand everything that's going on with the company. Boom, 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 right? It's beautiful. So the moral of the story is here, AMD, I think is set up so well. It's ridiculous, right? By the way, I don't know if you guys saw this video from 3 weeks ago as well, my warning to all stock market investors. That's a very important video there. If you want to look back at a video, I laid out everything that was going to happen in regards to Palantir, Tesla, AppLovin, all these stocks that got hammered recently. I laid it all out in that video for you guys there, man. Just, a gem dropper there. I hope people listen to it. Meanwhile, at that particular time when I released that video, people were margining out, going crazy into Palantir and Tesla calls and all this stuff. And I'm like, guys, watch out. They're setting you up. You're about to get dunked on. And boom, right after that, literally the very next week, obviously, we know what started to play out there, right? Now, the other stocks that are set to benefit here are stocks that need some air to breathe, right? Because now Nvidia is not, the problem with Nvidia is it can kind of be like a vacuum. It sucks up so much money when people want to just, buy Nvidia and hold Nvidia, and it's like Nvidia or nothing else, right? Since people are not going to pile into Nvidia, and it's not like, oh my gosh, I have to own Nvidia, that means money gets to go to other places. And there's some air to breathe for stocks like PayPal, stocks like Nike, which, by the way, we have now gone positive on Nike in the public account. And it wasn't that long ago, I was down 15+% on Nike. So we are now positive on that one, right? Stocks like Cheesecake, stocks like Estee Lauder, right? Which we are now positive on as well, right? These sorts of stocks have air to breathe. And so don't be surprised if those sorts of stocks continue to catch a bid and continue to get upward momentum, because people are going to look out there and say, do I really want to put money in Nvidia? No, I'm going to look for some other opportunities in the market. And those are the other sorts of stocks that will catch opportunities there, right? Additionally, valuations are starting to matter again. Who would have thunk it? Like, wow, it's really happening, right? Valuations don't matter when you're in a stock market that everybody just is willing to pay anything for anything, and it's like straight risk on, right? But as soon as that breaks, that trend breaks, valuation starts to matter. People start to say, you know what? I think I want to look at a trailing 12-month PE. You know what? A forward P. And if you've been trained well in the stock market, you always understand the P is what you got to come back to. You've got to look at the P ratios, and you got to look at forward growth rates and what's expected for a company over time, because that's going to tell you what you should actually expect for a return on your money over time. If you have to pay, if I tell you, you invest $1, but it's going to take me 100 years to pay you back that $1. Is that a good investment for you? No, it's not. If I say, you got to give me $1, and I'll pay you back that money, plus an additional dollar next year. Is that a good return on your money? Yes, it's a great return on your money, right? Unfortunately, in the stock market, people, especially if they're not trained well, right, and not trained properly in the stock market, they get into this like mindset of like, I just want it because it goes up. It's a hot stock. Like, and I'm like, that's not how this works. That's not a sustainable strategy long term. You're going to fail. Like, you're going to feel bad, and you're going to underperform the market, likely trying to adopt that sort of mindset of just playing whatever the hot thing is. Because if it was that easy, believe me, everybody in this world would just play the hot stocks and just make so much money. And oh my God, it doesn't work like that, man. It doesn't work like that at all. And so Costco, that's the issue these stocks are having, like Walmart, Costco. These stocks that got to ridiculous valuations. Look at Costco, a 60 trillion 12-month P, 55 forward P, 52 forward P. No. It needs to come down a lot more. It needs to come down to like, forward P at 30 or 35 is very fair for Costco. Very fair. But 55 is utterly ridiculous, okay? So valuations are starting to matter, and that's why those Costco put options are increasing with price. It's not even like Costco stock's gotten hit yet. That's the best part. Imagine Costco stock gets hit and goes down to 900, 950 or something like that, right? Which, by the way, that would just be where the stock was a few months ago. What do you think is going to happen to those put options if that happens? That's the thing you got to understand. Valuation is starting to matter again in this market, right? That leads me to talk about the 10-year treasury. 10-year treasury falling off a cliff. Like, guys, this is like, straight off a cliff. When it comes to a treasury yield moving down that quickly, that fast in a matter of a week or two, that's dramatic, okay? So there's big things happening here. I mean, big things. There's big things happening, and that has ramifications for the stock market, right? I received this text message today, right? It says, from a friend. It said, one of my customers just called and said he got doged. We're going to start calling it doged, I guess, okay? They were about to get $10 million in grant money for this factory in a state. They are starting, and now it's been put on hold. $2 to $3 million of equipment would have been purchased from my friend's company, right? And I said, dang, that stinks. Yeah, it could be a lot of this over the next 12, 24 months, right? This DOGE situation is actually causing a lot of real recession fears. The 10-year treasury keeps going down because people are starting to be scared about DOGE making such an impact that it's actually going to potentially cause a recession, which will then cause the Fed to lower the Fed funds rate considerably and keep the Fed funds rate low for potentially years to go in the future. And so the 10-year treasury is starting to show real weakness because there's true fear about this starting to play out, right? I'm sure you guys have seen the headlines, right? Trump administration shifts to the next phase of large-scale cuts to federal workforce, federal agencies told to submit reorganization plans, prepare for mass firings, right? DOGE is playing out, right? Now, here's the deal, okay? And by the way, this might be a great thing long-term for the United States, but there's no doubt, and this might be a necessary thing, to be quite frank, for the United States long-term, but there's no debating this is going to be a lot of pain short-term here. Because I'll put it to you like this, right? And I just want to kind of play this out so everybody can kind of, wrap it. I always want to try to explain things in the simplest way possible so everybody can just wrap their head around what's actually going on here, okay? So, worker gets fired. Government worker gets fired. They got doged, right? Okay. So, what happens to that worker after they get fired? Well, now they're out of a job, so they're going to have to cut their spending, right? Until they find another job, right? Or they start a business or something like that. But let's be honest, a government worker, they're not starting a business. They're going to try to find another job somewhere, right? So now it would usually be natural for a government worker to go find another government job, right? Because if you're kind of in that realm of working for the government, working for a state, working for the federal government, whatever, you're going to probably find another job that's in that category. But here's the issue. You're not going to be able to, because right now the government's not really looking to hire folks. They're looking to fire folks. So if you're going to find a job and you're a federal worker that just got fired or a government worker that just got fired, you're going to need to find it from the private sector, okay? So here you go. You're going on your job search. Let's say you made $65,000 a year, in your government job, right? So now you're going to the private workforce and you're going to try to find a company that's going to hire you. Right? So let's say some people do. They find a job that pays $65,000 and has the same benefits that the government job had. Boom. Okay. So now they can resume spending. It's all good. So they had to cut spending for a little bit, maybe for a few weeks, maybe for a few months while they were out of job. Which, by the way, that does hurt the economy in itself. But eventually they find a job that pays the same and boom, they start spending again. But some workers are going to not be able to find a job that pays that $65,000 if that's what they were making, right? And so some worker finds a job that pays $55,000, right? So they're like, oh, I'm glad I just found a job. It pays $10,000 less a year. Maybe it has less benefits, but you know what? I need a job. I got to pay my bills. So that person's making less money. Now they're going to spend less money in the economy, right? So let's say before that person went to Texas Roadhouse each week, right? So now they can't go to Texas Roadhouse anymore. Sad story, man. They can't go get those dang biscuits. They can't get the rack of ribs. They can't get a big beer. Sad, right? Now, some people aren't going to be able to find new jobs. They're going to probably apply, and they're going to be like, nah, we don't want you, government worker. You're not good enough to work in the private sector. We don't want you, right? So you're going to have some people that can't find a job, which means they're not even going to be able to spend money in the economy, right? Because they're going to be out of job for 6, 12, 18, 24 months. It's going to be a while for some workers because, some people are just going to be like, no, you're not it. We're not interested in you, right? Which then leads to a situation where, the guy can't go to Texas Roadhouse. So that causes Texas Roadhouse to not have as good as numbers, right? And then Texas Roadhouse says, you know what? We don't need to build quite as many Texas Roadhouses. So then the construction companies cut jobs because they're like, oh, we don't need to build as many Texas Roadhouses now, right? And then it leads to less orders of all the equipment and restaurant equipment. You see how the dominoes start to play out here? It's a whole game of dominoes. Now, the great thing for Texas Roadhouse, arguably the strongest restaurant chain in the whole United States of America, so they would probably just keep building restaurants even if their sales drop. But they're a one of one, right? They're a free company. The moral of the story is here, this is how the dominoes game plays out, right? Somebody loses a job, it causes short-term pain, and it might cause medium-term pain as well, right? And then that slows construction jobs, right? That slows orders, which hits back to companies, right? It's a whole chain of events that you guys got to understand. And so this DOGE situation, when Elon did the whole thing with Twitter, right, with X, and he cut all those employees, right? People are looking at that and they're like, hey, Elon did that with X, he did that with Twitter. Like, that's great. He's doing it with the government now. Yeah, here's the thing. Twitter has like hardly any employees, okay? So when you cut those jobs, it's not like that's going to tank the economy. Who's the biggest employer in the United States of America? It's the government. So when we're talking about you're going to cut massive amounts of jobs and you're the biggest employer, the jobs cut at Twitter doesn't matter. It doesn't matter. Like, it's such a small amount. You cut massive quantities of government jobs, the biggest employer in the United States of America. Now we start talking about that actually negatively affecting the economy and actually causing a domino effect for these dominoes to start falling one on the other and another, right? And you get a whole chain of events that start to go bad, and it goes way beyond just like, oh, government's cutting spending, because then it starts to actually hurt the private sector. And then you start getting job losses in the private sector, right? So this is it's a very high stakes, dangerous game that is going to be very difficult. Okay, very, very difficult. Now, with all that being said, right, and all that scariness of DOGE and then the tariffs and all that, that's a whole dramatic situation that we're not even touching on in this video here today, right? Listen, what did I tell you guys in the video last night on the reaction channel? I don't know if you guys watch my reaction channel as well. Jeremy Lefebvre Makes Money, right? I talked to you about something I've seen from people out there where, they say they're all in the market and things like that. And I always tell you guys, the number one most important thing for you to be a great investor in the market is you got more income than expenses each month. If you have more income than expenses, you win, right? Because all this drama, DOGE, tariffs, blah, 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 it's here today and it will eventually be gone, right? And you want to be able to take advantage and buy up stocks and continue to build out your portfolio regardless of the environment, right? And so you want to set up your life where you always have more income than expenses so you can win in this situation, right? And you're able to buy on all these dips here. It is so, so important, right? And if I look at like the public count, right? I mean, the public count goes up, it goes down, it goes all around, but it's a drama situation, right? But the bottom line is make more money, right? And, the public, I always have a view of the public account someday is going to be $10 million plus, right? If you ask me where the public account is 6 months from now, I don't know, $2 million, $4 million, $3 million, I don't know. And honestly, I don't care. Because I believe if I look out 5-10 years from now, the public account's going to be $10 million plus. It's going to be an 8-figure portfolio, right? And I do that for all my portfolios. I look them over and I think about where is this portfolio likely to be valued long term. Short term, it is going to be what it's going to be, right? And I can't control where the stock market goes in the short term. Neither can you. No one can control where the stock market goes short term. And people can try to predict and say, oh, stock market's going to fall 60%. You know how many times I've heard that since I've been on YouTube since 2016? Stock market's going to fall 60%, 50%, whatever, 40%. You know how many times I've heard that? Again and again and again, year after year after year. And it's no different this year. And get those people, oh, stock market's going to crash 60%. Like every year. I'm going to get it next year and the year after and the year after. At the end of the day, no one knows. No one has any clue where the stock market's going in the short term, right? I mean, I might have a decent understanding of where things are likely to play out, but still, at the end of the day, even I can't predict where the stock market's going, where the S&P 500 is going to be 6 months from now, because there's so many different variables there. What if this whole DOGE situation, yeah, they're cutting jobs, doing this. What if it actually doesn't really affect the economy? What if these people get jobs in the private sector and they actually become more productive? Like, that's a potential. I'm not going to bank on that, but it's a potential. And what happens if this causes a recession where unemployment goes to 7%? Like, there's a million variables there, and I can't control what happens there, but I can control building out my portfolio, adding the stocks every single month, right? I add stocks every single week, but you got to be in a position where you add stocks at least once a month. Continue to build out your portfolio bigger and bigger and bigger. There's a lot of great companies out there. Make your portfolio stronger, portfolio that can get through whatever. Tariffs, DOGE, blah, 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 inflation. My portfolios make it through the other side. Even the 2022, where the portfolio got smashed on, right? Made it out to the other side and got to see brighter days, right? And so that's the name of the game, guys. You just got to make it out to the other side in regards to the bear markets. And then those bull markets, you thrive, right? Remember, if we went back to late 2022, the public account was a $1 million portfolio. And today it's over $3 million. And that was 2.5 years ago, right? Not even quite 2.5 years ago. And so, over the next 6 months, who knows? Like I said, the portfolio could be 2 million, 2.5 million, 3 million, 3.5 million, 4 million. At the end of the day, the portfolio is going to be a $10 million plus portfolio long term. And that's all that matters in the end, right? Alrighty, guys, appreciate you joining me as always. Thank you so much for being here. If you're looking to access my entire library of premium courses like Become a Master Stock Market, Millionaire Playbook, Stock Options Mastery, Dividend Investing Mastery, Financial Statements Mastery, my Valuation Mastery course, as well as access my private Discord chat, the stocks I'm buying and selling, my $3 million plus Fidelity account each week, as well as if you want access to our full suite of tools such as 1000xstocks.com, pin comment down there. Fill out a form, see if we can get you access to that. Let's call it later on this week or maybe this weekend, okay? Alrighty, guys. Much love as always, and have a great day.